Did you know that over 90% of traders lose money consistently, not because of bad strategies, but because of their own mind? You can have the perfect system, the latest indicators, and real-time news feeds, and still fail. The problem isn't the market, it's how you think about it. In this video, we're going to uncover a truth that most traders will never realize. Welcome to our channel, your go-to hub for trading wisdom simplified. If you've been struggling with trading consistency, emotional decision-making, or unpredictable outcomes in the market, this series is for you. We're diving deep into one of the most important trading psychology books ever written, Trading in the Zone by Mark Douglas. In this video, we'll unpack Chapter 1 in detail, The Road to Success, Fundamental, Technical, or Mental Analysis. Get comfortable, because this lesson could change how you think about trading forever. The three categories of market analysis. Mark Douglas opens the chapter by highlighting the three traditional ways traders approach the market: fundamental analysis, technical analysis, and mental analysis. Let's briefly define them. Fundamental analysis. This is the oldest form of market prediction, where traders and investors study economic data, earnings reports, news events, and government policies to forecast market direction. It works on the belief that value is driven by real-world factors. For example, if a central bank raises interest rates, you might expect the country's currency to strengthen or a stock's value to drop if a company posts poor earnings. Technical analysis. This is the art of reading charts, price patterns, indicators, and candlestick formations. Traders using technical analysis believe that everything that affects price is already reflected in the market, and patterns tend to repeat over time. You've probably seen traders looking for head and shoulders patterns, moving average crossovers, or RSI signals. Mental analysis. And then there's the most overlooked, yet arguably most important type, mental analysis. This involves studying your own psychology, beliefs, and emotional patterns as a trader. Douglas boldly claims that while most traders obsess over the first two, it's the third, mental analysis, that truly separates winners from losers in the long run. The market is a random environment. One of the key ideas in this chapter is that the market operates in a random, unpredictable environment. It's easy to believe that with enough analysis you can predict what's going to happen next, but that's an illusion. Douglas points out that no matter how perfect your setup, how solid your signal, or how reliable your data, the outcome of any individual trade is uncertain. Why? Because every moment in the market is unique. Even if a pattern or condition looks identical to one from the past, the traders behind the market are different this time. Their motivations, emotions, and actions could lead to a completely different result. He uses this powerful statement: anything can happen at any time. And as traders, the sooner we accept this, the less emotionally attached we become to individual outcomes. This doesn't mean the market is chaotic or lacks structure. It means you are trading probabilities, not certainties. Think of it like rolling loaded dice. Even if you know the probability of a certain number coming up is higher, you can never guarantee it will land that way on the next roll. Why traders lose: the emotional traps. Douglas then moves on to why most traders lose, and surprisingly, it's not because of bad strategies. In fact, many losing traders have decent systems. The problem is how they emotionally handle the uncertainty of trading outcomes. Fear, greed, hope, and revenge trading are the four major emotions that sabotage trading success. Fear makes you hesitate, skip good setups, or exit winners too early. Greed pushes you to overtrade, increase position sizes after a few wins, or stay in a trade longer hoping for more. Hope blinds you to warning signs and makes you hold on to losing trades longer than you should. Revenge trading happens when you're desperate to win back what you just lost, leading to reckless decisions. Douglas explains that unless you develop mental discipline, these emotions will control your actions, causing you to break your rules and destroy your consistency. Have you ever entered a trade you knew didn't meet your criteria just because you didn't want to miss out? Or doubled your lot size to recover a loss only to lose more? That's what Mark calls emotional trading, and it's the downfall of most traders. You don't have to predict the market to win. One of Douglas's most liberating ideas is this: You don't need to know what's going to happen next to make money. Think about that for a second. Most traders believe they have to predict market direction to be profitable, but Douglas argues that trading is a game of probabilities, not certainties. Your job isn't to predict the outcome of each trade, it's to execute a system that gives you an edge over a series of trades. It's like a casino. A casino doesn't know whether the next hand of blackjack will be a win or a loss for them, but they do know that over thousands of hands, the odds are in their favor. As traders, we need to adopt this same mindset. Focus on your trading plan, manage risk, and stay emotionally detached from individual outcomes. Over time, your edge will play out. So, to wrap up Chapter 1 of Trading in the Zone, there are 3 forms of analysis: fundamental, technical, and mental. While most traders focus on the first 2, it's mental analysis, your ability to master your thoughts, emotions, and discipline that makes you consistently profitable. The market is a random environment. Anything can happen at any time. You don't have to predict the market to make money. Trade your edge over a large enough sample size, and the probabilities will favor you. And most importantly, control your emotions. Fear, greed, hope, and revenge trading will destroy even the best strategies if left unchecked. This chapter lays the foundation for the rest of the book, where Douglas will teach us how to build a bulletproof trading mindset, and we'll be covering every part right here on this channel. Thanks for tuning in to this in-depth breakdown of Chapter 1 of Trading in the Zone. If you found this valuable, hit the like button, subscribe to our channel, and turn on notifications so you never miss an episode. In the next video, we'll cover Chapter 2, where Mark Douglas explains the biggest mental mistakes traders make and how to overcome them. Until then, stay disciplined, trade smart, and trust the probabilities.